Shares of Mercadolibre are trading up about 6% in pre-market trading after the company reported fourth quarter earnings last night. But was it all roses for shareholders? We'll spend about the next 10 minutes finding out. My name is Brian Stoffel, and I do own shares of Mercadolibre. In fact, it's my largest holding, and there is one hidden risk that I do think investors need to be aware of. So let's dive into the quarter. If we go ahead, we see that on the top line, there was a lot to like. Revenue grew 41% to $3 billion. That was ahead of Wall Street's estimates. And Mercadolibre also came in well ahead of Wall Street's estimates on the bottom line. The company does not provide guidance at all. Now, margins were up across the board. We'll dig into that in a minute, but gross margins expanded more, 800 basis points. Operating margins basically went up 10x, and the net margins went from a loss to a gain. Free cash flow basically tripled to $1.4 billion, but you should see a huge difference between that $1.4 billion and net income of just $165 million. The balance sheet has about $4.3 billion in cash and $2.6 billion in debt. That does not include cash, restricted cash that it has, and we'll get to why that restricted cash was not included in my calculations in a minute. Let's look at those gross margins. The main reason for the jump, this big percentage jump right here, is that first-party revenue was a lower percentage of total sales. In other words, Mercadolibre branded things were a lower percentage of sales sold on Mercadolibre's e-market commerce place like eBay or Amazon, and that makes sense because they get higher margin revenue from selling other people's stuff on there as well. And the first party stuff that they did sell was higher margin in nature. Now, if we look at overall operating margins, this right here is what we just talked about, the improvement in gross profit, but we also saw some leverage from overall general and administrative overhead expenses and efficiency in the marketing, sales and marketing spend, and we'll dive into that, show you a little bit more about that in a second. Now, Mercadolibre has a ton of moving pieces, so we'll just try and summarize the important ones. This is gross merchandise volume, the value of all the things sold on Mercadolibre's commerce marketplace. The important thing to note here is that obviously it got a bump during COVID, but unlike other companies like Amazon, that bump is not abating nearly as much. It grew from $28 to $34 billion in gross merchandise volume over the past year. So that is good to see from the e-commerce side of business. The company's also spent a ton of money building out its Mercado Envios fulfillment network. That means all the places located throughout Central and South America to deliver packages. And they delivered over 1 billion packages. This did slow a little bit, but it is still up markedly. And the company said it's up about 2.5 times where it was 2019. But this is really important. Gross merchandise volume that's delivered within 48 hours rose from just 44% before the pandemic to nearly 80% in 2022. That means that it is building a wide moat around the business in terms of low-cost production. What's being produced? Fast delivery of products at a lower internal cost for the company. So that is really important for shareholders to note. Now let's go to the fintech side of the business, Mercado Pago, which is like PayPal, Venmo. The uses, the amount of money changing hands is parabolic, and it just continues. The red part here is when it's used on Mercadolibre's, to pay for things on Mercadolibre's marketplace. I would almost say that's growing somewhat linearly. It's this exponential, this parabolic growth of Mercado Pago to pay for things that have nothing to do with Mercadolibre's platform. And that means it is really getting ensconced in the daily life of Latin American culture. Now, they also have Mercado Credito. We're going to come back to this in a minute, but they offer credit to online and in-store merchants, consumers, and in the form of credit cards. You can see that consumers are the biggest chunk right here, and originations were pretty much flat and even down from their height in the second quarter. Well, again, we'll get more to that in a minute. And finally, the company called out Mercado Ads. They said it now accounts for they get an equivalent of 1.4% of gross merchandise volume in the fourth quarter from this, and that is 5 times larger than it was 3 years ago. We've seen that become high margin revenue for players like Amazon, and it seems like we're seeing that happen with Mercadolibre as well. We'll just go really quickly down the income statement here. Net revenues were up 41%. As we talked about, the cost of goods sold was only up 21%. When that happens, you see gross profit explode. But it doesn't stop there because operating expenses were also up less than revenue. Why? Because general administrative and sales and marketing, like we called out, weren't up nearly as much as revenue. Product and technology development was, and so was provision for doubtful accounts. That's the hidden risk we'll talk about in a second. But overall, that means that income from operations exploded, and so did net income. But we said that net income and free cash flow were majorly different. Now look at net income right here for the year was $482 million, but cash from operations for the year was $2.9 billion. Why such a big difference? We want to suss that out. And my thanks to Daniel at Unrivaled Investing for pointing this out to me. So unrealized foreign currency losses, that makes sense given where they operate. Depreciation and amortization, that makes sense given the build out of Mercado MBOs. But this right here, provision for doubtful accounts, that we need to dive into. That is the hidden risk that we need to be aware of. So this is the company's interest margin after losses over the past year. This is confusing, but this blue area right here, this number, is the revenue that they count from Mercado Credito. Of that 560, it's saying that about 216 million is bad debt. They don't think that they're going to collect on that. So that is alarming. Their interest margin after losses, IMAL, they believe that they will collect about 344 million. Their IMAL spread, which is basically showing how much they believe that they will collect of this interest margin, is up to 48%. You want to see this number get higher, and it is high right now. We want to see it get even higher. But this is an area that investors need to definitely watch. If we look at, this is their portfolio that's more than 90 days past due. Right here is the light green. That's growing. That is a harder trend to turn in the short term. It is easier to turn this less than 90 days past due, and we see that management noticed in the first and second quarter it was getting into a troubled territory right here and was able to enact stricter lending standards, especially in Brazil, and that was able to bring it down. So really, this is the key thing that investors need to watch, because you've got the commerce business doing very well. You've got Mercado Pago doing very well. But you've got this ad business that's taking off. You've got Mercado Envios that's doing well. But this credit portfolio, if they start lending out money that they're not able to collect on, that could be a risk that investors need to be aware of, especially if they're looking at, like I do, free cash flow. So let's continue on. And the company doesn't give guidance, but Wall Street's expecting 23% top line growth and about $3.12 per share for the current quarter. The company did announce, and this again is why it's so important to look at the credit portfolio, is that they now believe they have the tools in place to shift Mercado Pago from mainly being a payments wallet to a full service digital account. And to boot, to that point, they said in the fourth quarter, the average number of products being, well, just person-to-person payment, but now maybe they've got an interest-bearing account. Now maybe they've got a credit card with Mercado Pago. The number of products being used by digital account customers continues to rise, and it is profitable in Argentina. They must get those lending standards in line in order for this to be a good thing. Moving on to the full year, again, no guidance from management, but Wall Street's expecting 23% growth on the top line, $14.92 per share. What should we watch moving forward? We've got a new thing at the top of the list here, and that is accounts that are less than 90 days past due. We want to see that continue to fall from its 10.3% right now. Number 2, total payment volume of Mercado Pago. Number 3, gross merchandise volume on the platform. And number 4 is operating margins. In my opinion, the moat is definitely widening and the thesis is very much on track. This company scores, it's the best score possible on my framework, and it scores very well on Brian Feroldi's. Thinking about valuation, this company is definitely still in the hyper-growth mode, which means that it's pretty much just optimized for gross profit, but it's at least positive all the way the rest down the income statement. So if we look at the price-to-sales ratio at about 6, that's actually low against historical norms for the company. Gross profit is now clocking in at about $5.15 billion. That means it trades for about 11 times gross profit. P ratio is less helpful here. After today's earnings, which really juiced that bottom line, it's trading for 126 times trailing earnings and about 78 times forward earnings. I don't think that either of those are very useful. And finally, we look at the price to free cash flow. After today's results, it's really just trading at 23 times free cash flow. And to me, that is very reasonable if those credit portfolios are taken care of. If they're not, it could be a problem. So that's the main thing that I'll be watching moving forward. Let me know if you think something else is more important to watch by making a comment in the comments section below. Give us a thumbs up to help us get discovered, and we'll be back with this one in 90 days. Brian, out.